just to let you know, I will be recording this. I know a lot of people that will not be able to attend, so I will have it recorded to send to them. I am Christine Osceolo. I am a franchise specialist with FranNet. Thank you all for attending our Lunch and Learn. Our presenter today is Eric. He's going to explain how you will be able to determine the amount that you will pre-qualify for a business using their free qual program. But before he begins, I'd like to talk a little bit about FranNet and some franchising facts. So who is FranNet? FranNet has been around for over 28 years. We have over 80 offices, 3 in Germany, and we just opened 1 in England. We help potential entrepreneurs find a franchise that fits their profile at no cost to them. Many people are here looking for a business that can thrive in any economy. I get asked all the time, what is the most popular franchise? So we are looking for those few businesses that can thrive now and down the road. Right now, we see healthcare and senior care markets as one of the strongest markets out there. Census data that goes out every 3 years says that 25% of the population is over 65 and 25% is under 25. There's your residential repair. People aren't buying new homes. They're repairing the current ones. Old people can't repair. Young people don't know how. There's dual incomes. Households don't have the time. Then there's also child development. Education also has been driven by demographics. Then there's your essential services like your hair care. You have Supercuts that charges $15 for a haircut, or your automotive. People are fixing their cars and keeping them longer. There's also damage restoration. Houses gets damaged, mold, smoke, damage, fire. When this happens, someone needs to clean it up. Homeowners will call their insurance company. There's also business centers and IT services, all to help develop small businesses. Franchising isn't just fast food and retail. Just a small overall fact on franchising. There are over 3,000 different franchise companies in more than 80 industries with over 900,000 operating units. Some popular categories are pet care, cleaning, retail, and IT services. Can you make a burger? I know I can, and it would be a lot better. It's not just the product. It's all about the business systems. When you purchase a franchise, you purchase the marketing, sales, and operating systems. You do this so you don't have to reinvent the wheel. You can focus on building your business. Some people think franchising is very expensive. You have some that are $50,000 to $100,000, like your education and healthcare. These can be run from home, few employees. Then you have $100,000 to $250,000, which would include some retail, auto, some food, and some can go as high as $500,000, like your big food franchises, McDonald's, Burger King, Wendy's. We're having this webinar to show you how to pre-qualify for a loan before you buy a business. At the end of the day, it's all about finding a franchise that's best fit for you. You want to look at your 5, 10, 15-year goals and use franchising as a tool to help you get to your lifestyle and financial goals. I'm going to wrap this up. Here's my contact information. If you would like further information on if you can afford to buy your own business, please contact me and I will put you in touch with a knowledgeable funding representative. Please hold your questions to the end. Now I'm going to introduce you to Eric to learn more about your financing options.
Thank you very much, Christine, and thank you for everyone who's joining us today. The people at FranNet are the best in the business as far as helping entrepreneurs navigate the path to eventually buying their own business and purchasing a franchise. At Benetrends, we've been working with the FranNet organization for almost 30 years, and it is our passion to help people find the ways to purchase a franchise and get into business for themselves but not by themselves. As Christine mentioned, my name is Eric Schechterman. I work for Benetrends. I am the National Sales Director here, and what we do at Benetrends is we help people navigate the different funding options that are out there so that they can buy their own franchise. As Christine mentioned, we're going to talk a lot today about determining your fundability and figuring out what you can really access in order to buy that franchise. And what I'd like to do in order to talk about that more is really have a better make sure everyone has a better understanding on what are the common options that are used in order to purchase a franchise. because as you will find, there's a lot of options that you may not be aware of that can really increase your fundability to purchase a franchise. So first of all, what we've seen a lot in the lending industry is the lending gap getting smaller and smaller. As everybody remembers, especially in the northern New Jersey and the New Jersey area, New York, knows the global meltdown that everyone experienced back in 2008, 2009, and 10. And that really changed the lending environment. Unfortunately, we're finding a lot of entrepreneurs are still operating under the lending environment of 2009 and 10, thinking that there are no lending options out there for them in order to purchase a business. However, what we're seeing at Benetrends, especially in the last 2 to 3 years, is that there are more options for franchise funding than ever before. What I'm going to talk about today in order to help you determine your fundability and your ability to access funds are the 2 main products that we see in the franchise funding environment. One, many will know, referred to as an SBA loan, which is a government-backed loan, which we'll spend some time on, and something that is a lesser-known funding program referred to as rollovers for business startups. On an SBA loan, the most common type of loan that we see in the franchise industry is something that's called a 7A loan program. It is the most common franchise loan for business startups and existing businesses. The maximum loan amount is $5 million. However, we've seen a large increase in the last few years in the amount of SBA loans for under $350,000. In fact, at Benetrends, we actually have a program that is an SBA loan specifically for an amount between $50,000 and $150,000. So the SBA-approved banks throughout the country are really making an effort at lowering the type of SBA loan they are giving out there. An SBA loan is essentially a government-backed loan. The SBA, which is a division of the government, is not actually lending the money. What they are doing is they have their what's called a PLP bank, a preferred lending partner. And any bank that is a PLP bank is an SBA-backed lending company. So when they give out a loan, that loan that they give out is backed at a certain percentage by the government should there be a failure of that loan. So it really motivates the banks to put more money out there on the street and to help more people get into business. Currently, the maximum rate is 6%. The usual rate you're going to find is prime plus 2.75%. And the process of securing an SBA loan, while there's all different types, can usually take anywhere between 30 to 60 days for approval. Now, through our program that has the amount for the 50 to the 150, our typical turnaround is anywhere between 24 to 48 hours. But outside of those smaller lending programs, be wary of any type of marketing or information you find online that talk about low doc SBA programs or quick turnaround SBA programs. Once you get above the $150,000 mark, you're typically looking at a more drawn out process. And we'll talk about what some of those banks are looking for. So the typical eligibility requirements for an SBA loan are you're going to need strong personal credit, transferable management skills, and I want to spend a little bit of time on that point. Going back to the earlier years with SBA loans, a lot of times the banks wanted to see industry experience. So for example, if I was going to open a haircutting franchise, they'd want to know that I have experience in operating a haircutting business. The banks have changed a large amount on this topic. Really what they're looking for now is what's called transferable management skills, meaning do you have experience managing employees? Do you have experience in marketing? Do you have experience in sales? Do you have experience in managing your own P&L report, in logistics? All of those things they look at and they say, will these skill sets transfer over to this business? Which is why in the SBA world, the franchise business has become so popular and really the sweet spot for an SBA bank to lend to. Because typically those franchises have a very set model and set playbook, and you can easily identify what skill sets will be required to run that successful franchise. In securing an SBA loan, you typically have to put down an amount of 20 to 30% to secure the loan. And that's quite commonly referred to as an equity injection into the business. So for example, if I was going to secure a $200,000 SBA loan, I would typically need anywhere between $50,000 to $65,000 in a down payment as my equity injection into the business. You're going to want to have an updated resume, a written business plan that the great people at FranNet will give you direction as far as how you can get a proper business plan put together as far as securing that SBA loan. You're going to want to have at least 3 years worth of tax returns, a personal financial statement, and just a last bullet point on the SBA loan, what we're finding banks really like to see is when they look at a loan, they want to see the loan is large enough to cover 125% of the global debt service. Now that's a lot of words, and really in layman's terms what that means is the bank doesn't want to see that between the money you put into the business and the money that they're lending you, that you have just enough money to pay your bills and run the business on a shoestring. They want to see somebody that puts together a business plan that shows here's how much it's going to cost me to run the business, here's how much it's going to cost me to pay my employees, and here's how much I'm going to have left over so that I can make the proper business investments and making good decisions for the future of my business. And when it comes down to it, banks are always going to look at what we call the 5 C's. And that's character, capacity, capital, conditions, and collateral. Character, which is your past payment experience, really that credit score. Capacity, your ability to repay the loan. Capital, your owner's investment into the business, so that down payment and equity injection. Conditions, the intended purpose of the loan and the economy of what you're putting the business into. And collateral, the assets to secure the debt. So when you're looking at a loan and you're thinking about how is the bank looking at it, typical bankers, when they're looking at a loan, these are the 5 C's that they focus on. And in talking about the banks, what we've learned at Benetrends, and really where we've seen our clients have the highest level of success, is learning that banks have different appetites. As I mentioned before, the lending environment we have today is much better than where it was in 2009 to 2010. I would even say it's better than even before the financial meltdown of a few years back. The difference is how those loans are getting done. The day and age of the entrepreneur walking into their local bank and saying, here's an idea I have for a business, or here's the franchise I'm looking to buy, are really long gone. You really need to maximize what banks you're putting your deal in front of. And as I mentioned before, banks have different appetites. So some banks like chocolate and some banks like vanilla. If you bring the best vanilla deal in the world to a bank that prefers chocolate, they're going to turn you down. And then you're going to get buyer's fatigue. You're going to start to question the business plan. You're going to question the franchise model and wonder, well, if the bank won't lend me money, is this really a good idea? And sometimes it really can just come down to perhaps that bank has already hit their quota for that type of business for the year. Perhaps they have more of a preference of a service-based business as opposed to brick and mortar. And sometimes they prefer the brick and mortar over a home-based business. So it's really important to determine your buying profile, the profile of the business you're going to move forward with, and then determining which bank to get that deal in front of. And that's really where the experts of Benetrends come in. And what my suggestion would be on this call, if you are pursuing an SBA loan, going about that on your own is really going to be a tough feat. You're going to want to have somebody that's there with you along the way to help maximize your results. For example, what we do at Benetrends is we do our own underwriting process in-house here at Benetrends with our own SBA department. So we have a 4-team SBA department where all they do is look at loans and put their banker's hat on from their previous experience and say, is this a loan that I would approve if I were the bank? And essentially at that point, we can issue a pre-qualification letter for an SBA loan. And we can say, yes, Joe, you can qualify for a loan for $180,000 or 80% of your total project costs. And we provide that service completely free of charge as long as you work through our team at FranNet and Christine. And we've actually developed such a successful program that after we do our pre-qualification, if you decide you would now like Benetrends to go on your behalf and pursue that loan, because we know based off of your profile and based off of what the banks are looking for, which banks to send that deal to, we will then go out and execute that and try to get you multiple approvals for your business. And we don't even request a fee for that service until we are ready to send your loan out for approval. And just to give you an idea, at the point that we ask our clients for our fee to go out and pursue the loan for them, 97% of the package that we send out, we receive an approval. And in the rare case where we get to the point where we can say we have a loan that we think we can get approved and we send that loan out for approval, if we do not secure you an approval, we actually refund your fee for that service 100%. So that wraps up what I wanted to focus on as far as SBA lending, as that's one aspect to determining your overall fundability. The other product I want to talk about is what's referred to as rollovers as business startups. It's also called 401k rollover funding. And this is a program that really changes your fundability score. It will provide a level of liquid that you may have not known it was accessible previous to this presentation. It's actually become one of the more popular funding strategies to purchase a new business. In fact, many of the franchises sold in 2014 were used some form of retirement plan funding to make up the total funding package for the business. In a survey that was done in 2012, it actually showed that there were more rollovers for business startups done in the franchise industry than there were SBA loans. So what I want to do right now is talk to you a little bit about how the process works, why it was created, and what the benefits are. So as many of you may know, if you have money in a qualified retirement plan like a previous employer's 401k, current employer's 401k, an IRA, any type of qualified plan, if you wanted to take that money out, you're going to pay a high penalty and tax rate. So for the example I have up here on the screen, if I had $200,000 in, say, an IRA that I rolled over from a previous employer, and I wanted to pull that money out to buy a franchise, the first thing that's going to happen is I'm going to pay a 10% early withdrawal penalty. So now $20,000 of my $200,000 that I worked hard to save is gone to that penalty. Then, assuming you fall in a 30% state and federal income tax bracket, because you're going to have to pay income tax on that withdrawal, there's another $60,000 that's pulled out of that $200,000 that I saved. So from my initial savings that I'm now going to use to buy a business, if I were to just pull that money out, I'm going to walk away with only $120,000 of the $200,000 that I had initially saved, which is why it's not very common for people to go this route when it comes to buying a business. And that's where rollovers as business startups come into play. If anyone on the line here has ever gone through the experience of going from one employer to another, you know you can move your retirement funds from one company's plan to another company's plan without having to incur any taxes or penalties. That's one thing to remember when learning about rollover funding. The next item to remember is if any of you have ever participated in a retirement plan at a company that allowed you to purchase stock in the corporation, that is the second part of rollover funding. So what we do at Benetrends, and we've been doing this process for over 30 years, is we can set up a brand new corporation for your new business. Next, we're going to design and customize a qualified retirement plan for your new corporation. So now you have your new company that has its own qualified retirement plan. As the owner, you are going to be an employee of that business. So just like going from one company to another, you can take your current retirement funds and roll them over to your new corporation's retirement plan. And again, because it's going from one plan to another, there's no taxes or penalties to do so. The next thing to remember is that plan that we designed for the corporation allows investments in stocks, bonds, mutual funds, just like all of the other company retirement plans we all have experience with. It also provides the option to purchase company-owned stock. So what you can do at that time is direct your retirement plan to purchase the stock of your new corporation. And through that stock transaction, your retirement plan owns however many shares it can offer, and then the corporation has the proceeds from that stock sale to operate their business, 100% tax-deferred, penalty-free. So to go back to the previous example of having $200,000, I can set this process up, roll the $200,000 over to my new company's retirement plan, have my plan purchase $200,000 worth of stock of my corporation, and through that transaction, my corporation now has those funds in its corporate checking account, the full amount, 100% tax-deferred, penalty-free. And those funds can be used for any legitimate business expense, including payroll, furniture, fixtures, salaries, including franchise fees, training fees, assessment fees, site selection fees, anything you would need to run the business. Now the benefits to this program are very long, and they can be very important, and some are smaller and some are larger than others. The biggest thing is to really understand you're using your own retirement funds to invest in your own business. It is a safe, proven plan, and it is based on IRS regulations. As I mentioned before, we have done this process for over 30 years. We've completed this transaction over 10,000 times, and we've never had one plan disqualified by the IRS. To go all the way back to the example of the SBA loan, one of the other tremendous benefits, and we're seeing a large amount of these being done on a daily basis, is the money that you secure through the rollover process can be used to provide that equity injection you need for an SBA loan. So for example, if you wanted to secure a $200,000 SBA loan and needed to put $60,000 down as an equity injection into that business, and you had at least $60,000 in a previous retirement account, you can roll that money over and use that retirement account money to provide the equity injection to secure the SBA loan. For example, we had a client the other day that had that exact example. They had $100,000 in their 401k from a previous employer. They had about $50,000 in cash, and they were looking to secure a $200,000 SBA loan. What they decided to do is protect their cash, because cash is always king. They did the rollover, only used the $60,000 of their $100,000 they had in the account, leaving the other $40,000 invested in standard stocks, bonds, and mutual funds, and then used that $60,000 to secure their $200,000 SBA loan. So there's really a number of benefits to this type of funding. Also, the time period that it takes to complete this is very attractive. Typically, it takes from start to finish to where you have access to the funds anywhere between 12 to 15 business days. When it comes to what type of plans can be used for this funding program, the most important thing to point out is what does not qualify. And the only thing important to note with this type of funding is Roth IRAs do not qualify, and most employers require for you to no longer be employed with their company if the 401k plan you plan to use is in that company's plan. Now again, this is a key factor in determining your fundability, because essentially what you can do is that money that you may have in an IRA or a 401k from a previous employer, or even if it's a 401k from a current employer that you plan to leave, you can look at that amount of money as liquid. You can use that money as liquid as long as it's being used through this process to buy a business. And just this recaps the example I gave before of what we're seeing our clients have the highest level of success with, is combining the rollover program with securing the SBA loan, usually protecting all of their cash, not over leveraging their retirement account funds, and then securing that SBA loan. Now knowing all of those things really leads up to the overall purpose of today's call, is determining your fundability is a key aspect to buying a business. If anyone has experience in buying a home, typically the first thing you do is you get pre-qualified for a mortgage. So should I be looking at homes that are $200,000 to $300,000, $300,000 to $400,000, $400,000 to $500,000, and so on and so forth. There are a lot of tools online as far as figuring out your credit score. There's something out there called the SBSS score, which really helps you figure out what type of SBA funding you can qualify for. But there's really not an automated tool out there that takes a look at all of the assets, including what you may have in retirement accounts. And that's really what our passion is here at Benetrends. So we have set something up where we have our own pre-qualification specialist here at Benetrends. So if you work through the great people at FranNet and go through Christine and she can do an introduction with Benetrends, you don't have to go online. It's not computer-based. It's not entering numbers into a computer screen. You will actually speak to a pre-qualification specialist here at Benetrends who will take a look at all of those aspects and all of the funding programs that are out there. And then based off of that, issue you a level of funds that you can probably qualify for in order to look for a business. And the reason that's very exciting is that might turn a single unit franchise into 3 units. It might change something from looking at one area to becoming an area developer for a franchise. It really can change what franchises you're looking at, how much you can afford, and really the overall wealth building that you can do. So as I mentioned at Benetrends, we've been doing this for over 30 years. We have a team of over 75 experts in our office here just outside Philadelphia, and we have everything from our full suite of funding programs with the rollover funding, SBA loans. We also have our own insurance department, so for any of you that are going through a career transition and are concerned about high COBRA payments, we do help our clients secure health insurance and, of course, commercial insurance for once you eventually buy your franchise and you want to get your business owner policy, your liability insurance, your errors and omissions, and if you'd like to provide any type of insurance for your employees. And we also have our own payroll department. We have an ADP rep here on staff at Benetrends to help you with any of the minutia of running payroll through operating your business. Overall, we are here to help entrepreneurs take that step into business ownership. And whether it's using our funding program, our insurance programs, our payroll programs, or just to use us as a sounding board of ideas that you have of how you plan to fund your business. That's what we are here for. And we enjoy working with the great people at FranNet. If you have any interest in buying a business, you are with the right people at FranNet. They really are the matchmakers of this industry. And I would say a bulk of our clients come through the FranNet consultants throughout the country because we know that they have made the best decision for themselves and for their family as far as what business they decided to go into. So that concludes our conversation for today. I'm happy to open it up to any questions that you have. I'm sure Christine may unmute the lines, or if you have any questions you'd like to type into the chat box, and I'll remain on the line to answer any questions that anyone has.
I just unmuted everybody, so any questions?
Yes, hello. I don't know if you can hear me.
Yes, we hear you just fine.
Okay, great. My name is Lorenzo Clark, and believe it or not, I'm calling from over in Afghanistan. I'm retired military, and now I'm working as a contractor overseas. And my goal is to stop working overseas and to start my own business back stateside. And I apologize because my connection is probably not the greatest, and I actually got disconnected. I'm just trying to find out, sir, what's the best way that I can reach you, because I'm calling through a phone, so I don't have any video screens at all. And I'd like to get the website, please, a way to reach you.
Absolutely. And first let me say thank you for your service, and thank you for the question. We love working with our veterans. We have a couple of programs in place to really reduce the overall costs of a veteran getting into business. I know FranNet, that's a passion of theirs as well. You can always contact us. My best suggestion would be to go through Christine. Christine, do you want to provide this gentleman your email address and phone number, or would you like me to provide just Benetrends info?
Do you have our information for FranNet?
Not 100% sure. Honestly, one of my friends actually sent me an email. So the only phone number I had was the one I used to call into this line, this conference. So
Okay. Let me give you my email address.
Okay. I'm ready.
It's C Nociolo, N as in Nancy, O C C I O L O at FranNet, FRANNET.com.
Okay. And I apologize. I didn't catch the whole first part. I'm sorry. Can you just say it one more time? Just a little slower.
It's C Nociolo, N as in Nancy, O C C I O L O at FranNet.com.
Got it. Okay. Thank you.
And our Benetrends website is www.benetrends.com. So that's B as in boy, E, N as in Nancy, E, T as in Tom, R, E, N as in Nancy, D as in Dave, S as in Sam.com, Benetrends.com. And if you go on there, you can submit a request to learn more information, and there's a comment section. I would just say you attended the FranNet webinar and you would like to speak with Kristen Gordon, who works directly with Christine and all of her candidates.
Oh, okay. Awesome. Awesome. Okay, thank you guys so very much, and I'm looking forward to you guys helping me get myself set up, because I mean, as a contractor, I'm doing pretty well over here, but I don't want to be in Afghanistan much more than another year. And there's a couple of franchises I was looking into, but I was wondering about using my own money versus using some financing. So this is perfect. So thank you guys very much for your time and for the awesome information. I really appreciate it.
Well, thank you again for your service, and if you're looking at franchises, you're in the right hands with FranNet. And just so you know, as far as the retirement accounts work, thrift saving plans do qualify for this type of funding, which I know is the typical retirement account that is set up for veterans. So I would recommend starting the process through Christine. They do a great assessment tool to help you navigate your franchise path, and then she'll also do the introduction with Benetrends. But if you'd like to just come directly to our site as well, we'll make sure you get to the right hands. And thank you, and be safe over there and safe travels.
Thank you again so very much. I appreciate that. Thank you both very much.
You're welcome.
Awesome. That's awesome. Okay.
Does anyone else have any questions?
Yes. Will this PowerPoint be made available to the people on this call for future reference?
Yes. I recorded everything, and I will send it to you.
Okay, great.
This is Will. I have a question. It's Will Meacham. Eric, my understanding is the corporation that holds the new the new investment plan and the funds transfer has to be set up as a C corporation, which is frequently not the usual, the best choice for an entrepreneurial business because of the dual taxation. Can you speak about that a little bit, and what do you do about that?
Absolutely, and that's a great question, and thank you for that. And you are correct. The corporation that is set up for the business does need to be structured as a C corporation, and the reason for that is a C corporation is the only type of corporate entity that allows for a retirement plan to own stock in that corporation. And that's obviously how the funds become available. And your question is what we get, I would say, 99% of the time, because the biggest, there's a lot of benefits to a C corporation, specifically when it comes to insurance benefits, what's tax deductible, how you can structure it and protect yourselves as the owner and the liability that you have. But the one common knock is that people have what's perceived that issue of double taxation. And what Will was referring to there is in a C corporation, you are taxed as the individual and the corporation for its profits. And that is exactly why this program has become so popular. I am telling you this, if you use a rollover program and you're using a provider that helps manage it, which obviously what we do at Benetrends is we help administer the retirement plans for you moving forward, you will never run into a double taxation issue. And the reason for that is these C corporations are closely held corporations. So what profits are defined as is what's left over after all expenses, all salaries, and all bonuses are paid. So that is after you've paid any franchise fees, any royalty fees, you've paid all your employees, you've paid yourself your salaries, you've paid yourself your bonuses. That's after everything's all gone, what is left over. And at that point, that's where the key aspect of this type of funding comes into play, and that is realizing that you have that company retirement plan. So let's say after all of that is paid out, your bonuses, your salaries, everything else, there's $10,000 in profit left over. Now that's, again, let's say there was $50,000 and at the end you decided, I'm going to pay myself, I had a great year, a $25,000 bonus, I paid my employees some bonuses, and there's still $10,000 to $15,000 left in profit. Well, the retirement plans that we create allow for those tax-free contributions back to the retirement plan. So you can now take that profit money, make a contribution back to your retirement plan, shelter that money from any unnecessary taxes, and therefore no profits that are going to be double taxed in the corporation. So I will tell you, of the 10,000 clients we've done this for in our history, and of the over 6,000 active clients right now, we never have any issues with double taxation. And it's really the way of using that retirement plan to structure it. And keep in mind, with the type of businesses that we're working with in the franchise industry, the type of profits after all salaries, royalties, payroll, everything's all paid out. The level of profit that's left over at that point is a perfect amount to make a contribution and avoid that double taxation. So that's how we get around that. There's some other ways when it comes to the taxes. I know just enough to get myself in trouble and not enough to really be the expert. You know, fortunately, we have 75 people here that are focused on being those experts as far as the tax planning and the tax preparation. But that is essentially how our clients avoid the double taxation issue. And it is very rare and uncommon for that to happen, and the only times we've ever seen it even come up is when the client has so much profits after all that's done, and at that point we just design a different type of retirement plan, such as what's known as a defined benefit plan or a defined contribution plan or a safe harbor plan. There's a number of different ways, but the double taxation issue should never come up for any clients that have funded their business this way.
Okay, thanks. Now, does this kind of mean we have an ongoing, forever relationship with you and Benetrends to keep all this straight, or do people find another accountant or CPA? So
that's a great question. What we do at Benetrends is we set up everything to get you in place. So we set up your corporation, we design the retirement plan, we help get the money from where it is now and rolled over to where it needs to be in the plan, and then help initiate that stock transaction. Literally everything is done here in-house to make sure that you can write a check through the business. Once that portion is done, we then do take over as the third-party administrator of that retirement plan. So we handle all the administrative aspects of that plan, because that plan itself is its own entity, for lack of better words. It has its own EIN number. It has its own tax filing paperwork. It has amendments that it has to do. It has compliance testing. So yes, we take care of that ongoing relationship and then helping you use that. And if anything, we typically become part of your team along with your accountant. That'll still file your corporate taxes and your individual taxes, but we handle the administration of the actual retirement plan. The only other people that might come into play is if you have any money that you have not used for the company and left it in the retirement plan in traditional investments, that's when you would then have a typical custodian manage those, like a Fidelity or a Merrill Lynch, that we actually have working relationships with both, that have specific offices dedicated to clients that have funded their business this way.
Okay, got it. Thank you.
Okay, Eric, there's a question here. Will the 401k funding mechanism be around in 5 years?
That's a great question. But yes, just so everyone knows, this program is not going anywhere. There is no view that it's going to go anywhere. And just so you know, it's not a program. It's not an SBA program. It's not a specific loan. This is an actual act. This is an actual law It's actually, not to bore everybody, but it's Tax Code 4975 in the ERISA law of 1974. So this law has been in existence for well over 40 years. And for lack of better words, it would take an act of Congress to actually change this. So the ERISA law from 1974 put in place the law that allows for retirement plans to own what's known as qualified employer stocks. So yes, this is not something that would change. And keep in mind, this process is no different than if you worked for Johnson & Johnson, and in your Johnson & Johnson 401k plan, you decided to invest in stock in Johnson & Johnson. And for anyone that's ever worked for a large company, you know companies always push for their employees to own stock in the company because that provides funds for them to operate their business. So if this were to change, that would change all of those things as well. And again, this is a law that's been in existence for over 40 years, and it would actually take the law to change to minimize, to take this program away. And for anyone that even pays a little bit of attention to Congress, I think they have bigger things on their plate than worrying about the ERISA code of 1974. So no, there is no plan of this program ever going away. But just to stay active, we quite often head up to the D.C. area. We will go to the Hill and speak with the IRS and the chief compliance officers. Obviously, the franchise aspect of the United States is pretty much the largest small business development industry in the country. There's more business that is developed through franchises than any other level of small business. So it's a powerful lobby as well, and we have funded many franchises throughout the country. So no, this program will be around for many, many years to come, and we don't see any reason for that to change.
Thank you. Anybody else have any other questions? Okay, well, I thank everyone for attending today. Eric, thank you for your time. I appreciate it. I will be sending everybody an email. My information is on there. If anybody has any questions or needs anything, contact me anytime. And thank you again. Bye.
Thank you, everybody. Enjoy the rest of your day.